It's not much of a surprise. If you think about the trajectory the markets have been on for so long, I mean, taking a step back, the markets are up over 300% since March 2009. So they're never going to move in one direction forever. There's always going to be some up and down, and it's not too surprising to see the volatility that we saw earlier this week.
People point to not the level of yields, but the speed of the yield climb. Is that a surprise?
I think any time the market is reacting to some of the movements like that, there's going to be a reaction. I think what's important to us and what we focus on is how the markets perform and how the exchanges perform and how resilient the markets are. And, we're sitting here at the New York Stock Exchange on the floor, and it's just important to note that during periods of volatility is really where you see market models matter. The New York Stock Exchange designated market makers actually have the most stringent obligations of anybody else in the market. In fact, they're the only ones that are required to be there come hell or high water. And as a result, when you look at days like this week, you see that our quoted spreads, the quoted spreads on exchanges that don't have a market maker like that, increased 50% more than the NYSE spreads. That's value we can give to our listed companies.
Stacey, we've seen ETFs take on such a bigger role over the past several years during this bull market.
Right.
We haven't seen a lot of big pullbacks, though we did see one earlier this year. If you were to point to anything that's different about the way the market is behaving during a pullback, is there anything related to ETFs? And
I do think you see the level of ETF activity increase dramatically as investors are managing their exposures through passive investment. So we operate NYSE ARCA, which is the largest ETF listing and trading venue, and we saw our volumes increase 3 times over the past couple of days from normal average daily volumes there, just given the level of activity in the ETF space.
Now, behind us, we've got Anaplan just started trading. It's up about 40% right now, but we also got reports that Tencent Music might be holding off on its IPO. When you have periods of volatility like this, does it affect plans by companies to go public?
It does. Companies are always making their decision on whether or not market conditions should influence them and how they might want to react to that, and they don't all choose the same way. And we've seen that historically, where 2 companies that are scheduled to price the same day and there's market volatility, one may choose to go and one may not. So Anaplan chose to weather the storm, and it worked out well. They were priced last night at the high end of their range, despite all the volatility that the markets were experiencing right then. And then, as you mentioned, up over 40% today, so it worked out okay for them.
Are you getting the sense from some that they're looking to delay next year even?
No, they're all watching the market closely. I get that question a lot.
Yeah.
What do you think? The market's been up for so long. How long can it sustain? Is this something we should do? Should we escalate our plans and come in sooner rather than later to take advantage of the strength in the market? So they're all looking at that.
Stacey, you were on the list to attend the Future Investment Initiative in Riyadh in Saudi Arabia. CNBC has backed out of that conference, given some of the controversy around a journalist who disappeared there in Turkey. But that's not the reason why you backed out. I wonder, what is the reason why you're no longer attending? Is that a concern, these issues around Saudi Arabia and civil society?
I'm no longer attending. I can't attend the conference because I need to be down in Washington, D.C. at the SEC roundtable on market data and some of the market structure reforms. So the SEC convened a meeting to talk about the market model. It's exactly what I was highlighting today. It's so important, these market structure issues, because if we make changes in market structure that are not supporting all types of market conditions and periods of volatility, our issuers and public companies and investors are going to pay the price. So this topic is really very important and top of mind for us. So it's critical that I go down there and be a voice in DC to make sure that the policymakers understand the significance of why our model is the way it is today. And there are exchanges out there that might think it's not quite as important to have that rebate model. And that's a big part of why we're able to deliver more value to our listed companies and their investors.
But if you didn't have that conflict, how would these issues play into your decision to attend or not?
I have the conflict. I'm heading down. I actually haven't talked much about that.
Stacey, thank you.
Thank you so much.
What a we could spend, especially to watch it with the front row seat right here.
Critical to know that the markets behaved really well and that the markets are resilient. It's really important to understand that the exchanges do work together on making sure investor confidence is maintained during periods of volatility. You're never going to guarantee the market can go up, but you want to make sure it operates smoothly.